Everyone, this is Sahura. I will be with you to review the UK economic data and check the market reactions. As always, let's first see the data we had, and then we can go forward and check the market reaction as well. Data mostly published for the period after UK and US agreement on some framework for the tariffs. We know that there's trade talks and a framework that they got it gave somehow the positive impact in the market. That's why generally we are expecting to see slightly better reactions in the market, but it doesn't mean that these data they were so bright. Let's go forward and check one by one. Business investment fell by 4% in the second quarter after 2.9% or almost 4% increase in the first quarter. This fall in the second quarter shows that generally the market doesn't give too much positive doesn't have the market participant, actually, we can say, they do not have too much positive outlook in the UK economy. That's why the business investments falling sharply. Construction output, on the other hand, increased by 0.3% monthly after 0.5% decrease in the previous month. But on the annual scale, it increased 1.5%. It shows that while the business investments still the concerns there, and the business and the investors, they have concerns, but in the construction sector, it's somehow fine. Maybe it comes from this traditional idea that the construction investment and buying the house, buying the ground, they're just like always they're fine investment, and they are somehow the guaranteed investment, especially when you have too much concerns and uncertainty in the market. Maybe that comes from that point of view. We have to look that point of view as well. GDP increased by 0.3% in the second quarter, while the market was expecting 0.1% growth. But comparing with the previous months, with the previous quarter, it's slightly weaker, while we had a 0.7% growth. On the annual scale, 1.2% in the second quarter, we had a growth slightly better than 1% expectations, but still less than 1.3% growth that we had in the previous quarter. On the monthly base, in June, we had a 0.4% GDP growth, better than expected, better than previous months. And comparing to the annual scale, we had 1.4% GDP growth in June. Generally, the data as mentioned so far showing that UK economy is improving better than expected, but still comparing with the previous year, with the previous months, with the previous quarter, still the data, they are not bright data. Industrial production increased by 0.2% annually in June, comparing with 0.2% decrease or fall in the previous quarter, in the previous month, sorry. On the monthly scale, after 1.3% fall in May, in June, we had a 0.7% increase as a production in industrial production. Manufacturing production also, same trend. We had 0.5% in June increase, while annual scale it was flat. Going forward, in index service increased by 0.4%. I don't know if I mentioned, no change from the previous months. Service sector, the service inflation event, service sector activity, service inflation. In the previous last 2-3 months, they were somehow flat. We didn't have too much changes in the service sector. These data means that putting together, as mentioned, as the data even thought, they were better than expected, but generally, as mentioned, they were weak data. They were not. We don't say they were not weak. They were weaker comparing with the previous periods. That's why if you go on the trade, you can see that the trade balance slightly fell more than expected. Generally, the data mentioned, as mentioned, the data, they are fine, they are acceptable, but comparing with the previous periods, they are not too much right. Let's go forward and check the market reactions. These data, they can confirm that the Bank of England, the BOE, can continue its rate cut path. So, which means that it's not going to be a positive data for British pound. So the GBP, probably GBP is a slightly side movement with putting slightly pressure on a pound. So the pound is not going to be affected positively with these data. Negative affection somehow, but not positive. On the stock markets, these data, while the data they were negative and they were not a good data, but still they were better than expected in one hand. On the other hand, they were still confirming that the UK economy is weak. That's why better than expected positive impact and expectations for more supportive policies from both central bank and the government all together, dovish policies, which is going to be supportive for the stock market. That's why UK, however, and generally the stock market in Britain, they're going to take advantage. They're going to take advantage from this data, but not too much. I mean, but generally the side movement with the positive tendency, while the GBP side movement with the negative tendency, this is what we are expecting to see. Yeah, that was what happened in the UK economy and the market reactions. I hope it was useful for you. If you had any other question, don't forget to write in the comment section or try to get back to you as soon as I can. Have a good time. Bye-bye.